Forex is blindness I don't want to see. Won't you wrap the night around me? All right, boom. All right, look. Oh, my God. We got progress. This is good. This is good. I'm very happy. You're here. We're here together. Broadcasting. I think I see what you see. So do you guys see me in the bottom corner? Hello? How neat. How neat. Cool. Right on. And in fact, I could probably edit this. Let's just try it. Edit scene. Will it let me? I think so, just for fun. It's this, right? Yeah, cool. Hey, good morning, everybody. How you doing? Look, I got new glasses. Cool, huh? I know they're way bigger than I thought, but it's kind of weird picking glasses when you can't see, right? And then they're like, then you buy new glasses and you get home and you're like, dude, I look like a dork. That's all right, though. Right? You love me for my body, not my face, so that's cool. So anyways, great. So without further ado, as they say in France, or as they say in America, France. No, that's Canada, isn't it? France. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose.
Less than an hour now to the jobs report for the month.
My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. You're a Forex trader. We're a foreign exchange broker.
We've seen some general risk
so I want you to succeed. Here's the secret business model. I want you to succeed. I want you to find success as fast as possible. And if you've been hanging with me for a while, you know that to be true. In fact, I've been doing this webinar for over 10 years now. And I'm currently the Forex Speaker of the Year at FX Street.
The Shanghai was slightly lower. Australian stocks were down about 9%.
You know, and I think that's because you get my passion for your success. I'm not really trying to sell you anything else per se. What I would like to do is spend time today doing technical and fundamental analysis and share with you some of the good, the bad, and the ugly that I've gone through over the last 10 years with an overriding goal of helping you succeed sooner than later. And what you need for that is true skills, not tricks. Lots of people like little tricks. Well, a professional Forex trader that makes way too much money, the filthy, stinking rich Forex trader, they don't really have tricks. It's just a business. It's consistency.
Cable 124.87, also consolidating yesterday's move higher, and the dollar yen 102.95.
Wait, oh, you're hearing radio sound? All right, and I guess I might even have my speaker off. Okay, so let me turn that on. Let me turn that off. All right, so I want you to succeed, and I'm going to share with you as much knowledge as I possibly can, and no tricks, just simple skills that you can use day in and day out. And from this, I want you to take something that's probably very inconsistent. Your trading is probably very inconsistent because you don't really know what you're doing right. Right? No, I turned it off, right? You don't hear the sound anymore. The background sound, right? Right? All right, cool. So going back, you're probably very inconsistent in the beginning as an amateur trader in your first or second or even third or fourth year. You're probably very inconsistent because you're trying a couple of different things, but you haven't probably actually written down what your strengths and weaknesses are. And what we want to do over the amount of time is to get you confident as a trader. And you can't just be all around confident, right? You can't be like an all around golfer. You might be a top 10 golfer in the world, but you're still working on something, right? You're still working on something. You're putting, you're chipping, your psychological game, your physical, there's always something that you're working on, right? But you can't just jump from inconsistent to confident, right? So what you do is you start with consistency, right? practice very, very specific things and develop real skills. And because you're doing something consistently, you're taking control of your trading. And you're doing things like no longer chasing price around. You're doing things like, because you're practicing something very specific, you have very specific intentions, they're at the front of your mind, you're like waiting for something. You see what I mean? You're working on trading your bias, you're working on selling at resistance because you're a bear, and you're waiting, and it's going up, and you're waiting and waiting. Where's the next level of resistance? Where's the next level of resistance? Okay, we're there. What kind of pattern should I look for? And you're looking for reversal patterns at resistance. You're waiting and waiting. Well, even if you're not trading, the act of waiting is control. And the control brings consistency. See, that's how you have consistency. And once you start to see the results of that, you become a confident trader. Maybe not overall, but at least when you show up to continue the golf analogy, when you show up for your round of golf, at least you know you're confident in that 5-iron. Like, you call it your lucky 5-iron because that's your shot. You got that shot in your bag, and you can do that every time. And you just know it, just mentally and spiritually, right? So why would I do all of this? Because I want you to open a trading account at tradersway.com. It's not a shameless plug. I'm being right up front with you. I want you to succeed. And then you open up a trade account at tradersway.com specifically because I helped you. And then from there, you can grow your successful Forex trading business. It may be small in the beginning, but it'll grow over time. Your lot sizes will be small. They'll grow over time. But you'll be a client of Traders Way, trading real money for years and years and years because of the skills I've offered to you. Is that a fair business model? I hope you believe it is, and that means if you haven't gone to Traders Way to at least open up a demo account, then you're an embarrassment to your mother and your grandmother, and they're shaking their heads right now. That's not the kind of person I thought they would grow up to be. Okay, so there it is, right out there. So I help clients of Traders Way Monday through Thursday, 7:30 in the morning, and then I'm here every Friday at FX Street, 7:30 in the morning. That's it. Okay, I'm going to skip through this because nothing really matters. Anyone can see. Here's the hard part. The only thing that matters is NFP and the U.S. election. Right, so non-farm payrolls, look, they're going to raise, right? Right? The Fed's going to raise in December. Is there anything that's going to change the Fed's decision? Okay. Now, it's plausible, but, we need something very below average. Like 120, if the number came out 120, that'd be disappointing. Fed's still going to raise. If it came out 60, that could be a deal breaker. But all of that seems very unlikely. We have lots of trends in place. The 12-month is what? Probably close to 200. What's the 6-month average? 170. Right? So, I will probably be average, okay? So before we get going and starting to talk about the funnies and setting up the technicals and all that kind of stuff, there's probably quite a few new people in the room. Typically, we're looking at 600 or 700 people in the room. So some of you guys were in this webinar in 2007, 2008, 2009, and yet for some of you this is your very first. So just an overview of how to be a successful trader in general. The number one most important thing is to focus on not losing money. I know it sounds funny, but amateurs generally they focus on making as much money as possible. And they're trying for 25, 30, 40% per month because they're geniuses. But it's just stupid. I mean, it's possible, but it's not going to work a long time. So we'll address all of that. But the number one goal should be to trade, to have money in your account tomorrow, right? Isn't that what it is? Like, imagine you just got sent into war in active combat duty. And you wake up in the morning, what do you pray for? What's the first thing you pray for? Please, don't get killed, right? I mean, like, don't do something stupid and get yourself killed. You wake up and you're like, I hope I don't die today. That's a very simple, primitive thing. But as a Forex trader, you're very entrepreneurial, and you've probably subconsciously already accepted your failure because most people fail. So it's not your fault if you fail. Everyone else fails, and you kind of accept it. But what you need to do, even though you accept the risk, you need to change that and say, look, the number one goal is not to lose money. Or even, it can even be simpler than that. You can lose money today, just don't have a serious drawdown. Just don't let today be a significant day, especially a significantly, bad one. Right? Today, so I mentored somebody probably several years ago now, and I actually had him say things like, today is the day that I'm a disciplined trader, right? Today is the day that I'm going to trade my plan. I will not, right, do something stupid and lose a lot of money. Today, I will not blow up my trading account. Now, they're all very simple, primitive things, but I'm telling you, this simple mantra is powerful. So number one goal, capital preservation. Live to trade another day. In human analogy, if you're in war, don't do something stupid and get yourself killed. That's the most important thing, right? Now, the next one is minimal acceptable performance, and that means what you're trying to do is make money, obviously, right? But you have to have a trade plan, and you have to know sort of the value of your trade. And if the trade, let's say, is a little bit high in the risk, but there's not a lot of reward, you should probably not take that trade. Right? You should probably pass. Or say differently, when you do take a trade, let's say it's worth, in your mind, 50, maybe 70 pips. Well, along the way, you should move your stop, because you always use stops when you place a trade, right? Do I even need to say that? Right? Along the way, you move your stop to remove risk. Eventually, you get it at or near break even. And then somewhere along the way, on this trade that in your mind, it's worth 50 to 70 pips. You have your limit down. There's obvious pivots for targets, obvious fibs for targets, obvious psych levels for targets. You know where this is going. It's just a matter of time. That's how you're supposed to trade, by the way. You should be shocked that you lost money. You're like, how the hell did I lose money on that long trade? What kind of idiot shorted at that price level? Like, you should be shocked. That's right. So it's like you place a trade and you're like, yeah, this is going to go up. It's going to hit that resistance and then it's going to peter out. So I'm going to take profit. Oh, that's worth about 70 pips. Great. Got it. I'm going to take the shot. So you take the shot, and when you're up and you're profitable now, move your stop and protect even a small profit. Because like Einstein says, right? And I quote him in my book, I think in probably chapter number 1, the most powerful force in the universe is compound interest. He actually said that in a press interview, right, about quantum physics. So, right? So anyways, lock in the small profits, and you'll be surprised. The boring trades are the ones that you actually, put your children through college with. The boring trades are the ones that pay your mortgage. Just lots and lots and lots of really simple, straightforward trades you expect to make money on, and you make some, Sometimes you get unlucky and you only make 15 pips, your minimal acceptable performance. And sometimes, and then a lot of the time you hit your target, which is more like 50 or more, right? Good, fine. But here's the thing. Now you have an opportunity. Once you've locked in your minimal acceptable performance for your trade, now you have, sort of opportunity cost versus, actual money, because you can't even if the trade falls apart, you're still going to make money, right? So that's when you turn aggressive. And that's where you focus on actually growing your trading account. And if you can, let the trade run. I'm telling you. You already know this, but it's amazing. You know this, but nobody really seems to do it. Here's the big piece of advice. Let your winners run. And you say, Wayne, I know that. And then I look at your trading and you don't do it. Okay? So right? So maybe I should change what I said earlier. If you want to pay your mortgage, you take high probability trades that you're very confident in because you specifically practice them. You're very consistent. You have lots of control. You know what the outcome's going to be. You have an unfair advantage per se because you've seen this type of setup 1,000 times before, and you take the shot and you make money. But that's how trading's supposed to be. And if all you do is get the 50 pips, let's say, sometimes it's 15, sometimes it's 50, sometimes it's a small loss. Yeah, you might pay your mortgage, but you'll never get filthy stinking rich. And of course I'm exaggerating for effect, but whatever filthy stinking rich means to you, the way you do it is let your winners run. Right? Add another trade, remove the risk, add another trade, remove the risk, add another trade, remove the risk, and if you can catch a trend, boom. Okay, so anyways, that's where I'm taking you. Capital preservation, capital acquisition, capital appreciation. Please take a screenshot because you're going to ask me, Wayne, what's that green line? Well, take a screenshot and we'll go through this. I want lots of time to be able to talk about the fundies, but we got to do this because there's lots of new people. Okay, one more time. Take a screenshot. 3, 2, 1. Okay. I use the 2155 EMAs to represent the speed and the direction of the market. If the 21 is below the 55, the market is bearish. It is bearish. It's not an opinion. I'm not an opinionated person. I'm a horribly opinionated person. But I don't have opinions about the market. I'm very factual. I know exactly what's happening. And one thing, if I open up a chart like this, it's bearish. Now, if you want to, so that's an objective thing, right? Like, it's just like, it is bearish. The market is bearish. That's it. It is bearish. Why? 21 is below the 55. Now, the subjective part is, how bearish is it? Well, with an angle and separation that's widening, right? Or diverging, if you want to use MACD, the moving averages are diverging, right? In that case, it's bearish, and I should be aggressive. And then when they're converging, so you should be able to draw a MACD here. It'd be so easy to draw a MACD. If you drew a MACD here, the MACD is rising, and therefore I'm still technically bearish, right? But I'm conservative. I'm worried about double bottoms. Here, I'm not worried about double bottoms. Here, I'm in fact predicting double bottoms. And it's just how I use the moving averages. You can use whatever you want. 34.89 would be just great, right? By the way that you make your money in Forex is not making tricks. I'm going to go back to the trick thing. I think you get sold a lot of promises about tricks. How to make a quick buck in Forex. It's stupid. Tell that guy to shut his mouth. Women are too smart to sell you crap like that, right? You tell them to shut up. You don't want tricks. The way you make money in Forex is by actually making a decision. See, if you're doing a trick, like, I'll straddle the market, no matter which way it goes, I'll make money. Well, first of all, that's dumb, right? There's no way that works. And then second of all, you're avoiding what is an actual value to the rest of the world. That you analyzed information, both technically and fundamentally, And because of that analysis, you made a decision. That is worth money. That's value. You're adding value to the world. It's called alpha. Right? You've made a decision. So anytime someone tries to sell you something that avoids making a decision, realize that you're depriving yourself of your destiny. You're talking to the devil. Hell no! Mama didn't raise no fool. So do the work. Fall in love with doing the work, guys. Fall in love with the analysis. Be at peace. Don't look at tricks. So, going back to technical analysis here, once I've decided I want to be a bear or a bull, I need to know when to pull the trigger. And I need to know something more like, what's happening in the moment, the momentum, so to speak. So I use the 5/8 moving averages, and a 5/8 cross down in a bearish market is just simply a trigger, and this is an opportunity to take profit, right? Sell, take profit. Okay, let me go back to the previous chart if it will allow me. Yeah, so see here, 21's below the 55. It's already below the 55. So this is probably like London Open, right? So here's the sell. And here's where you take profit. Genius, genius, genius. It's beautiful, man. I'm telling you, when you start trading properly, you'll fall in love. You'll fall in love with your charts. Okay, 200 EMA, I use fair market value. Okay, we can talk about that more later. Volatility, I use the Bollinger Bands. Straight out of the box, just add Bollinger Bands. That's the right setting. Okay, 2 standard deviations, right? What, Boris, doesn't he use like 5 or 6 Bollinger Bands? He likes to know what the 1 standard deviation, the 2 standard deviation, 3 standard deviation, 4 standard deviation. Like, well, yeah. I don't know what, but anyways. Good. So, and then the MACD and the stochastics. So one point I want to make is when I use the moving averages, let's go back, okay? The way that I use moving averages, okay, the 2155 is a measure of the market. Is the market bullish or bearish? And if so, how bearish or bullish, right? Then I use the 5/8 to measure price action within the market. Then going all the way to the oscillators now, the MACD represents overbought and oversold conditions for the market. In the oscillator, I speed up, right? So the MACD slowed down. The stochastics, I speed up, and it measures overbought and oversold conditions for price. So I'm measuring overbought and oversold conditions for both the 2155 and the 5/8. Genius, genius, genius. The next thing you're going to ask is what time frames? All time frames. 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, and daily. And daily, it's, a lot of people use simple moving averages on daily. So you can use them, but let's just say 4 hours and less. And on other platforms besides MT4, I've used these setups on the 2 minute, the 3 minute, and the 2 hour, as well as these ones that I just went through, and they all work. It's golden. Okay, so there you go. So all time frames, but I don't use weekly charts, for example, because you're forcing everything into pure technical analysis, and I think that's nonsense. You have to incorporate fundamentals, and you might be looking at support or resistance from something 19 years ago, or even 19 months ago, and the fundamentals are completely different. And I don't think that's valid. I think maybe on the short term, when you hit that, just on the self-fulfilling prophecy kind of stuff, you might see what you're looking for, but I believe it's going to be a confirmation bias. I think truly what matters most, more than these technical setups, are the fundamentals. Okay, fundamentals first. Okay, so I'll go through the scalp right before the event because a lot of people are lazy and they just log in at the last second, and then they're like, Wayne, are you going to tell us how to trade it? I'm like, yeah, I told you 45 minutes ago. So, anyways, all right. So the market's expecting what? What numbers is FX Street reporting? About what, 175? So, I kind of feel like it's going to be less than that, but I don't think it'll be terribly important if we miss it big time. You already have been given the link to how to prepare and predict the outcome of the jobs report, right? Have you read it? There's the link. So, and I guess I'll show it to you so you have eye candy. Okay. Here's the report, right? How to prepare for and trade the employment situation report. It used to have 300 likes, but unfortunately there's no likes anymore. But anyways, it used to be well liked. And in here, I give you all the different things you use in fundamental analysis to create a model to predict the non-farm payrolls headline number. And then I give two different strategies in which we will trade today. We'll either get a range opportunity, which is a counter trend trade, right, or a scalp strategy, which is a high volatility event driven strategy, right? And then I give some advice and some tips. I know, right? I know, seriously. Yeah, I know, right? It's good stuff. So there it is. I'm assuming because you are interested in doing the work that you've done it. How do you work out the math? Well, I don't know if there's a math number, but I came up with a number last month. Correct me if I'm wrong on this. I came up with a number last month, and I think I was within 3,000. It might have been like 1,000. I can't remember. So I get lucky from time to time, but I don't even know how the the government comes up with the number. It's such fuzzy logic, right? But you get a general idea, right? Because think of it in sort of relative terms, not absolute terms. Is the market expecting a good number or a bad number? Okay. Think of that way. And if the number comes out bad and they were thinking good, then that's very bad. If they're expecting a bad number and it came out bad, it may not be as bad as you thought, and that might be good. Right? I've seen it, man. I'm telling you. Right? I'm telling you, I've seen it before. Where a bad number can be good, a good number can be bad. You're like, 190,000. Yeah, but they thought there was going to be 220. And so it falls. You're like, whoa. So it's sort of just all relative to what the inefficient market is. So like, silly professors at my school, right, my stupid Harvard, they still believe in an efficient market. And they believe that the market is intelligent and completely rational. I think the market is full of a bunch of idiots. I think it's irrational and completely emotional, which is good because I can steamroll over all of that. I love it. That's how I make my money. So, in that case, the market can react in strange in almost illogical ways. Like I said, bad news that's not as bad can be good news. So think of it that way, like, I don't care, like, if it comes out 175. Well, what does that mean? Well, we expected 175, so not a lot's likely going to happen, but it does give permission for the market to do whatever it wants to do. So if the pound dollar wants to go up another level, it'll do it. And we'll all say, oh, well, it's the non-farm payrolls number. Well, it might be the non-farm payrolls number was just sort of neutral. And what that means is no initial dollar strength. So anyone that wants to long the pound dollar has permission because no one's going to stop them. Great. So now that goes to the next level, and we'll say, and then the people on TV will tell you how deep this meaning is of what the non-farm payrolls means to, and they'll say, oh, well, that means the market believes the Fed's not going to raise interest rates in December. And like, no. It's just, there wasn't anything stopping the pound dollar from going up to the next level. I mean, they overdo it, right? Which is good for me because if the pound dollar goes up, it allows me to sell the hell out of it later. Love that. Great. Let it go up. Oh, because of what? Because Brexit's over? Of course not. There's still a Brexit. Still going to Brexit. So if it wants to go up, great. I'll sell it later. If euro dollar wants to go up, great. I'll sell that later too. Good. Okay. So, and then if the number comes out significantly more than what the market expects, right? And what does that significantly more mean? I don't know. What does it mean to you? Okay? Okay? So imagine it comes out better than expected, significantly better than expected. Dollar will probably get ripper strong because that means the Fed has to raise interest rates. But how many times have you heard that? And you know that's dumb too, right? I mean, we've been hearing that for 3 years. Well, the unemployment rate dropped below 6.5%. They have to raise interest rates now. They told us they would. Do you remember that? The Fed said, we will raise interest rates once unemployment gets below 6.5. Right? Like 6.5, it's like 4.9. They're still barely doing anything, right? So the dollar, though, would get strong. And then if it's very bad, right, if it's significantly bad, like it comes out 120 versus 170, I don't think it'll change the policy, but people will play it like the Fed may not raise interest rates. We'll look at the Fed funds futures market and see what they tell us, what they think in the money markets, right? But maybe the percentage of the likelihood drops, which means the pound dollar will probably skyrocket. So you could simplify things. How about this? Are you ready? Are you listening? Shh. Don't type. Just listen. If the number is disappointing, the US dollar probably weakens, and you long pound dollar. If the number is better than expected, the dollar probably strengthens and you sell euro dollar. What do you stink? Smell like a plan? Someone on YouTube says, first time here, came across your webinar by accident, like 5 minutes ago. Awesome host you are, sir. Thank you. Thank you. All right, cool. Well, so I guess I'll see you next month too, huh? Make sure you go to FX Street and register, huh? Become part of the family. All right, so anyways, what do you think of the pretty colors? Do you like the pretty colors on the charts? Yeah? Good? Ish gut? All right, so maybe I feel bold today, like my computer's stable enough to bust out my drawing tool. But, it's only a 3-hour webinar. Ant wants me to repeat that. All right. Hey, welcome to Non-Farm Payrolls. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. That part? All right. I know I'm being facetious. No, see, I'm not going to tell you. Because you're going to then, because you didn't get it, you're going to try to just do whatever I said, and that's, no, I don't want to do that. I don't want you to do that. I want you to learn and think and observe. So no. All right. So here we are. Some of the things I'm looking at, and this is one of my canaries in the coal mine, so to speak. Okay. This is the projected low for the week, and we're here. Okay. And not cool, right? Not cool if you're looking for yen strength. But I'll tell you what, the interesting part of this is at the beginning of the week, we topped out here, right? You see this? Okay. This is M3, by the way. And based on M3 on Monday, the projected bottom, just based on this level here, is the top of this green zone, which is M1. Okay? And that's like straight out of the book kind of thing. And remember, my book, which I wrote a long time ago, many, many years ago, I think it was probably one of the first books to even write about pivot points. I don't think there's too many others. What's his name? John. John wrote a whole book on, what's his name? One guy did write a whole book on pivot points, and I'm sure it's good, and some seasonality and stuff in there. But especially if you go back to whenever I wrote it, 2007, 2008, whatever it was, there just weren't any books really. And I spell it right out. I'm like, look, if the top of the market's M3, the target's M1. I'm like, boom. Okay, look, it went a little lower, like Crimea River, right? But notice the consolidation here. And then it did come back and touch it again. And then it came back and touched it again a third time. And I think you'd agree that it's reacting to that M1 each time. Person, there you go, yeah. Yeah, I used to do all the trade shows all around the world, and John was part of the cycle. He probably still does it, but yeah, he'd be at every show. I'd bump into him at the airport, stuff like that. And I think he has written some books, but now there's probably 1,000 books on pivot points. I don't know, but I don't recall reading about them before I wrote about them. Love is blindness. Okay. So anyways, straight out of the book, and the important point is it's not genius. The important part is it's predictable and it works. Even years later, it works. Again, the projected target, if you will, as a bear was here. And look at how important that level did play. Even if it didn't really act as support, it acted as resistance. Clearly, other people in the market are doing the same thing, right? And it's quite a coincidence that it's also that area there. So pivot points. So a bull here, right? Because it's hard to be a bear. You don't want to sell at support, right? So a bull is hoping for something like this today. Okay? A bear is going to want to sell off this area here. And a bear is going to say, bring it down, pop it up, drop it like it's hot. Okay, so you have to decide who you are. Don't be both. Thank you for the heads up on the time. I appreciate that. I like when we work as a team. Ooh, Saudi Arabia is threatening Iran. Oil just crashed. Thank you, Saudi Arabia. All right, so Saudi Arabia just announced that if Iran doesn't get on board, they're going to pump more oil. The funny thing is they can't pump any more oil. They're already at 100% capacity. So it's sort of a silly threat. But if we can open up the chart, oil just did that. All right. If you could only figure out what my strategy is. Love is blindness and cold steel. right? So check this out. This is something I was just doing the other day. I was showing how easy it is to trade. You don't even need moving averages or anything. All you need is a line on your chart. All right, so you can see what I was teaching. Down, 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 right? Up. Oh, these are just psych levels. Down, up to 49, down, up to 48.5, down, up to 48, down, right? Up to 47.5, down, right? And then this is a simple roll reversal, right? Up to 47, down. It's so complicated. I can't figure it out. How do you trade oil? It's so crazy. I mean, look at it's ridiculously easy. So, all right, well, now I got to mark this. Okay. Love is blind. So this one didn't quite play the psych level. It's pretty close, though. Come on. Don't get all cranky. Beautiful stuff, though, huh? So anyway, so now we have to mark the next one, right? At some point, we may come back and replay that. And this is supposed to be 50, right? So let me mark 50. So we're busting through 46 right now, so let's even mark 46. That'll probably come in play, right? So anyway, so this move here, if you want to see it on a regular chart, okay, that's what it looks like. See my moving averages? The market's bearish. And how do you use the 21? Do you guys remember what I said? I said when price is below the 21 EMA and the 21 is below the 55, you are bearish and aggressive. So you can see here, price had returned from being below the 21, back to the 21, sell, right? Back to the 21, sell. That's how it's done, son. Oh, the name of my book? Strategic and Tactical Forex Trading. Okay. All right. Is good. All right. Let's do. I kind of like sticking on USD yen. I wonder if we should just stick with that today. So I'm not going to jump around and tell you what to do. I hope you appreciate that. What I want to do today is show you how you set up your support and resistance lines and how to trade volatility and so on and so forth. And I might blurt out what's happening all over the place because I have 18 screens and like 100 charts. But I'm not going to trade for you, and I'm not going to make decisions for you. So what you should find whatever you want to trade and be prepared to trade it. You can kind of see, like, for example, what I'm doing on euro dollar. This just goes back to last week. Check it out. Up, down, up. This happened last week, right? Down, up, down, up. Okay? But if I were a burr, if I was a burr, this has got to be interesting, right? On the 4-hour, we're still above the 25, so you'd almost have to do it like in counter trend fashion, right? So it'd be a very aggressive move if you're a burr. So you got to start with the lower time frames first, and you can see there is weakness here as we're going into the news. There is no market. See, the 21.55 are essentially the same. There's no market. See, here the market's bullish, and I'm aggressive. Here the market's sort of bullish, but conservative. Remember, I said when you're kicking off the 55, you're actually expecting double tops in this case. Look, we got a double top. Drops, resets off the 200, which is the fair market value. Okay. And now a bear is actually looking for a lower high, lower low, and it didn't even get that. So that we're pure range bound here. Okay, because a bear was looking for this and didn't get it, okay? A bull would like a higher high and didn't get that. So we're really sort of in something like this, and I think what could happen is something like this, okay? In particular if the number's good. And so now you got to sell into a 4-hour support, which means we're likely to get a big bounce somewhere around 110.50, and the next one is about 110.20. So it could be straight down, straight up, and then maybe end the day down again. Okay? Okay. Wrong place to ask such questions. All right, so, okay, so, oh, yeah. We got to do this. Okay, here we go. You guys ready for the scalp? Okay, high volatility event-driven strategy. And on the link I gave you earlier, the link to, you know, how to prepare and trade non-farm payrolls, that shows the counter trend as well, which we'll cover later because that is after a scalp. Okay, so here we go. Hot to go, HOTTOGO. So the market is going to move. The number is going to come out. It's going to move. We don't know if it's going to move up or down. It doesn't matter. Don't trade before the news. When the number comes out, we want to use the initial reaction by the participants in the market to discern whether they feel the number is bullish or bearish. Because remember, a bad number might be a good number because it's not as bad as some people thought. So, you know, don't just say low number is bad and high number is good. It's all relative. And in particular, what's more important is what other people think. So we're just going to let the news come out. And this is going to be a 1-minute chart because it's a scalp. So you can see we kind of consolidated here, and then the news came out. It spiked up, spiked down, spiked up, spiked up, spiked up, and then first bearish engulfing candle. So what I'm looking for is that pullback, okay? That's what I'm looking for. The first piece of information that I'm using here is the market responded to the actual news bullishly. That's all I care. That's all I care about. I say, hey, I guess it's bullish, and I'm looking to buy. But I don't buy high, I buy low. So right now I'm just doing analysis. I want to mark this as an important level. I call this my line in the sand. And the idea of what we're going to do is charge the line. You can use bayonets or you can use sniper rifles, right? You can, whatever you want. Okay? And so when we do get a pullback, what I'm hoping to do is somewhere between the 3A2 and 618 Fibonacci, right? Retracement. I would like to go long. And I'm looking for like maybe a green candle for me to long and go this way, right? So it's a bullish reaction, a pullback, and it may only last 10 seconds, guys. And then boom, trade it. Hold over the weekend trade? No, this is called a scalp, not a hold over the weekend trade. Okay? Yeah, get rid of that idiot. Thank you, moderator. All right. And in this example, it doesn't work out perfect. I'm sorry. I live in the real world. So in this case, it didn't stay in the sweet spot. It came down and made a 786, but then, you know, immediately jumped, turned green, and then didn't make a new low, and then didn't make a new low. So somewhere in here, you need to long bomb it. Okay? Not enough time for a committee meeting, not enough time for a group hug. You're either ready to do it or you're not. So you can see it went up, and you had less than 2 minutes to prepare. Probably minute 3 is where you went long. And that's that. Within the first 10 seconds of minute 3. Because you knew you're at 786. Like, look at guys. Let's say you did long right in here. Where's your stop? Just below here. Right? Just below there. How much are you possibly risking? 15 pips? And if you longed up here, how much are you risking? 25 pips? Yeah, it's nothing. Get over it. If that's too much money, then you're over leveraged. Cry me a river. If you lose more than 25 pips on this scalp, you're not doing what you're told, and you deserve it. And maybe if you're smart, you'll learn. But there won't be any sympathy, right? So you pull the trigger here, you drop a stop, And then, praying never hurts. But what you'll notice is as we get closer, as we get closer to here, in this area, you move your stop to break even, and it's hero or zero going into the event. Okay? And pop. Okay? I want to go to USD yen. I'm going to turn tradethenews.com on so we can get the audio.
This is a 20.
And I have the S&P 500 next to us. I'm going to change the layout. I got time, I think, right? And this will be on 1 minute. All right, here we go. Hot to go, HOTTOGO. Remember, if you don't know what you're doing,
90 seconds
don't trade.
October data.
If you don't know what you're doing, go to tradersway.com, open up a demo account, and then practice with me.
Expected to take it down 1/10 to 4.9%.
So remember, we're in weekly support. Anything short is actually higher risker, and it would be bothersome. Of course, it can fall, but I'm hoping this goes up just because we're bouncing off support. But as I already showed you, there is resistance above us, and you probably want to get short around 104. Less than a minute here. And by the way, thank you for attending the webinar. I've been doing this for 10 and a half years now. And, I hope to see you next month as well. Trade safe, guys.
The October employment data in just a few seconds. $161,000 at 4.9%, unemployment in line at 4.9%, 161,000 for payrolls, a little below the 173 expectation, but back month revised up to 191,000 from 156,000. No back month revision to unemployment. Hourly earnings at 0.4% is 1/10 higher than expected. Back month also revised up 1/10 to 0.3%. Year over year, 2.8% is 2/10 higher than expected for hourly earnings. The back month revised up 1/10 to 2.7%. Hourly trade balance data minus $36.4 billion, a little narrower than the minus $38 billion expected for U.S. trade balance. Canada merchandise trade at minus $4.1 billion versus minus $1.7 billion expectation. Canada unemployment in line at 7%. Change in employment at 44,000 is higher than the minus 15,000 expected for Canada.
Okay, a lot of news to go over.
Initial reaction, we've seen the bond markets move a little bit lower and recover, the dollar firming up a little bit, but also snapping back. We see a back month revision to the non-farm payrolls. The unemployment rate fell as expected, and we saw a better than expected jump in average hourly earnings and a back month revision there.
Initial move, dollar positive, kicking off of a monthly M2 for the Dixie, for the dollar index. Copper at a double top at monthly and weekly reversal pivots. Oil still depressed based on the Saudi Arabian news that they're going to punish Iran. Notice we got a 50% Fibonacci retracement. Right? So let's go through this. September trade out of Canada, I guess disappointing. Oops, wrong. U.S. trade balance. Let's see, imports. Imports were down. Exports were up. I guess that's good. See, I don't like it. I like imports going up because it means you're rich. Okay. Remember, your job right now is your stop should be at break even. You should be profitable, and you should be looking for the next level of resistance. I think you'll have a little bit of trouble at 103.50, but the big number is going to be closer to 104. There's a monthly central pivot, weekly pivot, and you're going to get close to the 104 psych level. Okay. So non-farm payrolls 161. Well, that's about right. You know, what did I say? A little disappointing? A little lower, I think is what I said. Okay, so it came out a little lower. Let's see, private payrolls 142. Let me get some specifics here, because I know you demand
And the dollar extending gains now. The euro
specifics and facts.
down 25 pips. U.S. interest rate.
Okay. Change in manufacturing payrolls, -9. So people are losing their factory jobs. Non-farm payrolls last month revised significantly higher. So last month we got 156, and it came out. It's now being reported as 191. So the number we just got, the headline number for this month, is not bad. It's like good enough, not bad, good enough. Remember, and I said if it's not disappointing, the euro dollar falls, right? All right, to the person on YouTube that needs a link to my book and the cost, why don't you try Amazon.com? That probably is a good place to start, since they have every book in the world. All right, non-farm payrolls. So now we got a not bad non-farm payrolls for this month, and last month went from not bad to pretty decent. About upper bound average, 191. So that's a good number. All right, here comes the 5-minute retracement, guys. This is also plausible. Right? You can do this one if you want. And then the next one would be, I change this chart to a 5-minute chart, and there sometimes is an opportunity there as well. Okay? So it's like scalp and then another scalp. All right, going back to the numbers here. Private payrolls from last month rise higher. Not as many people were laid off from their manufacturing jobs last month as initially reported. So last month, across the board, better, and better. You guys wonder where I get this information so quickly? Besides TradeTheNews.com? Where could you go? Let's say if you don't have money to pay for something. Where could you get this information? How about the government? Oh, this is their life. Oh, this is their model. Right? So anyways, pretty pictures, right? Isn't it amazing the government actually gives you this information? See? Now you can be wicked smart. You guys want to be smart money? You got to do the work. You got to earn it. Okay? Here, I'll put a link. This is the Bureau of Labor Statistics. The BLS is your new friend. So maybe we'll look at that a little bit later. So anybody thinking about this one? Okay. So pound yen kicked off its 1 hour 21. Euro yen struggling. Aussie yen initial up and was dropped by its 4 hour 21, but supported by its daily 55. The daily 55 is predicting a top around 80. So if I were to guess, Aussie yen goes up to 80 and then drops. Maybe not today, but you know. All right, so look. Well, all right, so GM says, I think the problem with the FOMC is that they're not enough paying enough to offset debt growth and all that kind of stuff. You know, one of the things I think they miss a bit because they're so domestically focused and they're just learning about foreign exchange and international trade. It's amazing. But there's this theory, the Stoller-Samuelson theorem, something like that. Do you guys know this one? I can't remember what it's called. Anybody an economist? Let's this is old school now. The Stoller, I think it's Stoller-Samuelson theorem. Wow, I think I even misspelled theorem. Misspelled everything. Hang on. Stoller-Samuelson theorem. All right, part of the Heckscher-Ohlin model. All right, let's see if this comes out right. All right, obviously I didn't prepare this. All right, is a basic theorem in the HO trade theory. Describes the relationship between relative prices of output and relative factor rewards, specifically real wages and return to capital. Would you like me to say that in English now? Oh wait, there is a delay, so if I'm off topic, just let me know. Alexander says very muted response by the market. Yeah, well, it came out as expected. So no one's surprised. That's what everybody expected. So the thing is, what I was saying before is people will then tiptoe back into doing whatever they wanted to do. All eyes are on the election. Sure. Yeah. Love is blind. So USD. Oh, let me do the CAD stuff. I think I skipped over the CAD stuff. I'm sorry. Sorry. Bum 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 bum. Oh, the underemployment rate dropped, lowest since 2008. That's interesting. Question, should you trade the pound yen and buy it? Call your mom. You're missing the whole point. If you're a buy, so I think what you're saying is a buy, right? All right, if you're a bull, you buy its support. So my question to you is, where's your support? Give me 2 price levels that you find that you believe will act as support. Okay. If you're asking now too, you're also not even scalping. So I don't. A question like that tells me that you don't know what you're doing. So no, and then don't trade, because you're not scalping by the timing of your question. You're not scalping, and you should already be long if you bought it off the hourly 21. There's a bit of resistance where we are now, so doing something now, you're either scalping long or you're already long. Would you long euro dollar now? Why would I do that? Okay, Jim says, should I long euro dollar? All right, so are you a bull? I think your opportunity might have come and passed. I think we've already dropped and hit a weekly pivot point as support, right? So long, I think we've already come to that junction, right? So you're going to buy it at 111, I guess, is what you're thinking? I don't know. So let's put this in reverse. If you're thinking of buying euro dollar, that's the same as selling USD yen, right? And it's like, well, if you were going to sell this, now is a little bit late, isn't it? And where's the support? I would say the support's about here, right? So if you were going to sell it, you don't sell at support, right? So I struggle to figure out what your plan is. Like if you were so bearish, you had the top of that range, the drop, okay? And let's say that's a little scary, fine. So if I was a bear, I think I would rather it break, head down to 80, and then retrace back to 103 and then sell. Okay? And the same thing with euro dollar in reverse. You wouldn't buy it at 111 when we dropped down to 110.80. If you wanted to buy it, you would have bought it at 110.80. So you wouldn't buy it here, but if it breaks up and then retraces back, then maybe, right? Or you've already done these things based on scalping, but we're still in scalp mode here, guys. Right? Remember, your first entry should have been about here, and then this came down for the second chance entry, which is really just the 5-minute move, which I blurted out, right? So we're still in the initial phase here. And you would think that a not bad non-farm payrolls with a very good revised non-farm payrolls from the previous month would be dollar bullish. I think that's what you would think. You see what I mean? And now maybe you believe like the market's going to do the opposite of that to take advantage of all the people and whatever. Think the way you want to think. I think fundamentally it would make sense to say in particular the revisions to last month's non-farm payrolls is more than enough to allow the Fed to raise interest rates if they want to. So remember I said I'm not really opinionated as a trader, right? So let's see what the other people think. Okay, so let's go to the money market. And the way that the money market works is that they're buying and selling very, 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 very liquid paper. And there are slight price differences based on their negotiations. And the thing that affects negotiations of price most importantly are what people think interest rates will be. So if I sold you a bond that pays 1% and you bought it today, but you honestly thought the Fed was going to raise interest rates in December, you could say, well, I may delay my purchase of bonds because I think I can get a higher interest rate if I just wait a few weeks. Just like literally a month. If I just wait 1 month, I can get a better deal. So I'll just wait. I'll delay my purchase. But someone might want to sell you that bond, and they're like, dude, I want you to buy my bond now. And you say to the guy, hey, well, I don't want to buy your bond now. I'm not going to get a good deal. I basically lose money. So the guy's like, okay, I'll come down on price. You're like, oh. And you get the same effective rate. So prices change. And they change based on when the interest rates would likely to change. So let me move this over. The page is loading, so it's slowing things down. There we go. Okay, so this is the liquid money market. Okay. And these, right, Fed rate decisions, right? Next one's February, and then March. Okay. And based on the differences in price in these very, very liquid short-term bonds, they're actually not bonds, right? They're but anyways, the short-term stuff, the changes in price tell you that based on their negotiations what they think, because you're only going to come down in price as a seller if you believe interest rates are going to go up. Otherwise, what are you going to do out of benevolence for your buyer? You're going to come down in price because you like him? Oh, that Jimmy, he's such a nice guy. I'll give him a good deal, huh? Do you understand they're trading? I think the smallest trade you are legally allowed to make is $100 million. And that is like chunks of corn in your quesadilla. 100 million's nothing. Okay. So anyway, it's a very big market, very big, very liquid, and it will give you a true price. It's better than a survey of what people think. This is actually what they're doing, and it's every day it's updated, right? So anyways, let's take a look. Okay. If you lent the government $99.50. On December 14th, they'll pay you $100. Or to say it differently, to lend the government, to get $100, how about, let's do it that way. To get $100 government bond, let's call it. I know I'm not using the right terminology and stuff, but just for simplicity, right? To buy a $100 government bond, you only have to pay $99.50. Cool, right? They don't pay a yield. You don't earn any interest. But you will make 50 cents. Because when it expires, you'll get your $100. You see what I mean? You pay $99.50, and then when the bond matures, you get $100 back. So you made 50 cents. You're like, that's not a lot of money. Well, make it $100 million, and you only had to pay $99,500,000. Remember, the smallest profit you would be able to make is $500,000 profit. That's it. You're like, hey, that's not a bad day, right? All right, so let's look at February. You only have to lend them $99.41. That's the actual price right now, today. Why? That shows, because again, this doesn't pay interest rates, your return on investment is higher, which is the same as a yield, right? It's the greater the discount, the higher the return, which is a higher interest rate, basically, right? So interest rates have gone up. They've already gone up. $99.34. The market is telling you, right? The market is telling you that there's an 82% chance that the Fed will raise interest rates between now and June. And there's some discrepancy by how much. And then year over year. Okay. Now you only have to lend them $99.27, right? 30-day Fed fund futures prices. Cool. All right, so it shows you probability. Okay, and someone was telling me the other day it was like 90%, but I don't see that. Previous day, 71, 71 and a half. So anyways, interesting, right? Hey, my pleasure, Johnny. Freddie Boy wants to know if I think buying the S&P 500 is a good idea. Well, again, I'm not your financial advisor, and you're not paying me money to make decisions. So I'm not going to make a decision for you. Where's my freaking money? You pay me, we'll talk, huh? But anyways, so let's talk about it in a different point of view, because I'm not going to talk you into a trade. That's between you, your financial advisor, and God, baby, right? But we've had 9 down days in a row, right? Longest negative streak since what, 2008? Yeah, well, we don't have time, right, Cam? We don't have time to not communicate clearly. Who has time for that? All right, so we've had the worst streak in many years in the stock market, 9 down days in a row. I believe in the U.S. stock market. I am a bull. And if I were me, I would be looking for different levels of support in which I may be interested in buying. And the news that came out today is fairly decent. Yeah, based on pivot point theory, that's all I want to know. Okay, that's better. That's better. I accept that a little more. Okay, I accept that a little more. So we'll talk about that. So I am looking for support if I were me. Okay. So the next question is, what will we use as support? Well, we're out of weekly pivots. I don't have a S3 on here, and I find that risky anyways. Okay. I find that a little risky anyways. It's pretty uncommon for weekly pivots to go all the way to S3. But I'll tell you what. Let's move over to a monthly. Let's see what we got over here. Do you use New York close 5 p.m. as the start of the night? No. But you could. And I prefer to be a swing trader in the direction of the prevailing trend. So I rely a lot more on weekly pivot points than I did 7 or 8 years ago. Right? I used to be more of an intraday. My favorite chart used to be like a 15-minute chart, and my idea of minimal acceptable performance was every time I pulled the trigger, I expected a 50 pip profit. And if the trade didn't go well, I only made 15. That was my minimal acceptable performance. And I'd be embarrassed to only get 15 pips profit. And that's what that was all about. Every time I pull the trigger, I'm going to make money is the idea. Otherwise, why would you pull the trigger if you weren't certain you were going to make money? And then the second part of it is, at least no matter what, even if it doesn't really kind of work out or volatility goes against you, you only make 15 pips, right? But it's profit, and they all add up in the long run. Well, I'm more of a swing trader now, so I've gone from like 15-minute charts with daily pivots to more like, let's say, an hourly chart with weekly pivots. And I'm looking for clusters of weekly and monthly pivots that overlap. Hello? Okay. So where do I want to do this? Let's do this one here. So anyway, so based on the fundamentals before we get to the pivots, okay? Is that it seems to be good enough, the economy seems to be good enough that the Fed can raise interest rates slightly to they're still low. And and the economy is not so overheated that you would think the Fed was going to raise interest rates a lot. So they may only raise interest rates once per year, a quarter point per year. And if things really get good, maybe 0.5%. But remember, the Fed used to raise by 0.5% each meeting, 2 or 3 times a year, right? Every other meeting, let's say, or every live meeting, for example. Well, we're thinking maybe they raise interest rates once per year, and it's not by much, right? So, so we have permission. Or let's say we have the results that the Fed can raise interest rates, but not by much. But it is a good sign, that commodity prices have stabilized, that companies are earning profits, that people are getting jobs, people are spending money. Okay. There are little warning signs, like I showed you, we didn't import as much, and I think that's bad. I think an improving trade deficit is good, or is not good, is bad. So, so we're not in the free and clear, but at least I wake up in the morning and say, thank God I don't live in Europe. Right? Could be worse. Could be European. Right? Because look at the problems they got. Oh my gosh. Right? You understand? There's some real structural problems there. And they're still, still reluctant to even use monetary policy, but which government in the world is actually doing some fiscal policy, right? Wow. So, anyways, I'm going to take today's event, today's results, as decent. We are going to raise interest rates, but not by a lot. It's going to be lower for longer, but at least we're moving in the right direction. And a little bit of yield increase ain't bad, and it's good for some people, and it's not going to hurt very many others, right? I don't think it's a true Pareto improvement, but I don't think anyone is crazy harmed, and I think some people are helped out. By the way, no one wanted to know about that Stopper Samuelson idea and about the Fed, huh? All right, cool. Just want to know about pivots, I guess. All right, so anyways, I would take all of that and say there's potential for the stock market to go up, okay? But we're not there yet. You might want to look at psych levels. Is 2084 a big psych level, dude? And the answer is probably not, right? That's not a particularly important bottom, for example. 21 is below the 55, and we're on the 20, and we're on the 55. That tells me that we'll probably do something like a double bottom. Okay? A double bottom is a reversal pattern, and that would reduce my risk if I was a bull. All right, you understand? Still isn't necessarily an entry. You could try it and be long here, but that's still a higher risk. But you're still doing what's plausible. Then the next part is it goes up, hits this pivot, hits this roll reversal, and it will respect it. See, I can predict the future. I can see the future. That's called technical analysis. I don't know if it's going to be fulfilled, but I'll tell you, it's going to come up here, and then it will fall. See? Do you think I'm a confident trader? If it does this, it will go there, and then it will come down. And then your second chance opportunity is this, because now you're going to play, because this new high is higher than the last high, off of a double bottom. Then the next thing you do is you catch a retracement off of this level, and you're going to be 3A2 long up into a 1618 into this pivot cluster between monthly and weekly pivots, and probably congruency with the 200 EMA, which is fair market value. Okay? And then it really comes down to how the market wants to play this next week. What's going to happen next week in the stock market with a huge election that is going to come out 50-50, right? We already know that. See, the United States should listen to a Canadian. I think the United States should move to a parliamentary system so that you could elect Clinton, you can elect Trump, and you can elect the Libertarians and the Green Party and a couple others in there. Right? And then form coalitions. And get everybody's opinion in there. All right? Because here's the problem with America. 20% of Americans are Democrats. 20% are Republicans. Right? 20% have no idea about anything. They're just a big, giant question mark. Right? And 40% of Americans don't vote at all. Just, they don't even vote. And even one of my wife's friends, I got all upset with her. My wife was saying, "Oh yeah, so and so said she probably won't even vote." I'm like, "What the hell are you talking about? How could that possibly be the right decision?" The greatest freedom. And here it is, a college-educated woman. And she's just like, "No, I'm not even going to vote." That's an abomination. I got very upset. My wife's like, "Well, I guess I'll tell her then." I'm like, "But no. I'm going home." People died for that opportunity. I mean, my God. But whatever, I'm getting all upset. So anyway, really, it's going to come out, and it's going to be close enough where nobody knows, and then there's going to be, Trump's going to fight it, and blah, 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 and yeah, it's going to be great. Okay? So how is the market going to react to that next week, guys? I don't know. But I'll be here. Right? And if you open up an account at tradersway.com, we can work together and we can evaluate what's happening in real time. Okay? And we'll react to the reaction in logical, intelligent ways. If you've known me over the years, I never freak out. I never, ever freak out. Okay. So we can handle it together as a team. So pivot-wise was the next part of the question. So I would like this to go up. I think it should go up. I think it could go up. Okay, whatever. Your question was specifically about pivots. They're not helping me at all. So I'm not looking at dailies. That's that. Okay. I am looking at weeklies. We're through the weeklies. No help to me. And we're not really playing this monthly M1 very well. I mean, I know people know it's there. Okay. This proves it, and this proves it. I know that people know it's there. It's not a coincidence. I don't believe in coincidences. Okay? And we're not playing it bullishly. So really, technically what would happen is this drops. Okay? But like I already pointed out to you, we haven't got above that pivot. We are kicking off the 55. So what I think is going to happen is like this. Okay? And if that occurs, I'm going to try to play this pivot here as support, and I'll have my stop a little here. But the pivots are not great in the moment, and it tells me there's something else affecting the stock market. Yes, Freddie, Trader's Way is a foreign exchange broker, and they do offer MT4 as a trading platform. One of the things I was thinking of doing is bundling up my charts. I'll clean them up first, of course, but imagine you got this whole list, and they're all pre-organized, and they have all the indicators on them. Right? And all the templates and all the profiles and all that kind of stuff are all there. And that I give it to clients of Trader's Way. So like if you have a live account, for example, we would send it to you. And I thought, well, what about people that are, cheaters, right? Got to hate the cheaters, right? So I thought, so I looked into it, and I can set it up so that there's like a licensing process. So you close your account and it stops working, and you transfer it to a different broker's MT4. It won't work there either. So I thought, yeah, that kind of makes sense. So let me know if that's helpful and that kind of stuff. Yes, that's right, Anthony. The other thing is if you have a demo account at Trader's Way, I can help you. We'll do live webinars every day. All right, so going back to the world here, USD yen still has not made a lower low. It's not behaving the way we would hope. I'm looking around actually, and everything is kind of back to where it was before the news, huh? Okay. Wayne, how many displays do you use to trade? And oh, that's an interesting question. All right, so I guess we can do it this way. So hello, this is me. Hello. Let's see, can you see them all? 1, 2, 3, 4, 5, 6, 12, 18. Yeah, so I got 18, as you can see. And I organized them, generally speaking, all my yen pairs are over here. Okay? This, what you're looking at here, just this screen, right? That is the Kiwi yen. That's it, the whole screen, Kiwi yen. I have a Kiwi yen 1 hour, 15-minute, 4-hour, and daily chart. So this screen has 4 charts. Okay? Up here, CNBC. Over here, Bloomberg. Right? So let's see. Very often I have them full screen. Right? Isn't that beautiful? What do you stink? Okay. So 18 screens. Each screen has 4. Generally speaking, has 4 different charts, 4 different time frames. Like over here, I got a lot of commodities going on, so I'm watching the U.S. dollar, the S&P 500, the Chinese yuan, oil, gold, and copper, for example. Bunch of different things, right? Everything to my right, though, like these other things, like that's pound dollar, euro dollar, USD yen, USD CAD, Aussie dollar, right? And over there's Aussie yen, CAD yen, Kiwi yen, S&P 500, pound yen, euro yen closer, And then what you see is just this screen here. Right here, I have TradeTheNews.com, which is a live squawk service. I get real-time news and stuff like that. That's happening here. Right here's the chat. Very often I have like email going on or something else there, Call of Duty, whatever is needed at the moment. And that's the setup. There are arrays behind here, so they're stacked as you can see. And so there's poles behind them holding them up, and you couldn't imagine the wall of cables behind here. It's redonkulous, and there is one PC behind the wall. All right, so I got a question here. Oh yeah, CNBC and Bloomberg with the volume off. Yes, I never listen. I don't care what other people think. Again, I'm a professional, right? I get paid to make decisions. So why would I care about anybody else? They might influence my decisions. And by and large, people don't do the work. They just spit out other people's work. So I don't listen. I'm not even interested. But I like to know who's on, and maybe I can read the headlines and what are they talking about, and but yeah, there's no sound. There's absolutely no sound. I literally don't care. Also, psychologically it's up there because I spend a lot of time at my desk and I'm lonely. And it's just, instead of talking to, volleyballs, Wilson, right? My friends are you're my friends, and these people on the screen keep me in touch with humanity. So I kind of feel like I'm in the movie I Am Legend, where the guy wakes up in the morning and he's the last person on Earth, and because he's so lonely and out of touch with humanity, because humanity's dead, that he watches videotape recordings of the morning news. Now it's from years ago, but at least he gets to see a human out, with the microphone, out in the park. Oh, it's such a beautiful morning. The weather's going to be great today. Right? But he's the last person on Earth. Well, kind of like that. These are my people. My friends are up there on CNBC and Bloomberg. Why not? Another question is, why did sometimes price act vice versa to what you'd think would happen? So, as I explained before the news, that if the news is expected to be bad, and the number does come out bad, but not as bad as they thought, then that's good news. And then sometimes people are expecting good numbers, and the numbers come out good, but not gooder, then the reaction is bad. And that's because people are front running. So when somebody thinks something, they usually trade it. And then if they find out it's not what they were expecting, then they're on the wrong side of the trade and they got to get out. Or it's buy the rumor, sell the news type stuff. So like, this non-farm payrolls is going to be great, so they buy it, and then as soon as it comes out, then they dump it. Okay? Wayne, you have one computer driving all those charts, right? Yes. Yes, Freddy boy. Okay. What else? Lots of questions here. Elaine's having Elaine's brain just exploded. I guess that's good, right? How can you plug 18 screens into one PC? I used a screwdriver. Yeah, you buy one, right? Right? You buy one. So they have computers that run 18 screens. You give them money, they give you the computer. Now, my first computer had one screen. And then I went to 3 screens, and I was just blown away. Oh, my gosh. And people would come over. You know what? In fact, I had 2 screens. That's right. I had 2 screens. People would come over the house, and they're like, oh, my God, you have 2 screens on your computer. Well, this was in 1979, so that was pretty amazing. They're like, oh, my God, what do you do? And I'm like, I'm a foreign currency trader. What's a foreign currency trader? It's so amazing. And then people went redonkulous when I got 3 screens. By then, it was 1982. And I had 3 screens on my desk. Hey, I worked in a home office, right? And they're just like, oh, my God, what you're doing is crazy. And so I'm doing Forex, and my neighbor's husband decided he wanted to follow my same footsteps. So he got into options trading. He took an options course, started trading options, and lost all his money. So anyway, so I had the 3 screens. And the funny story about the 3 screens was I got behind the desk, and I was hooking up the 3rd computer, and it was, all that kind of stuff. It was very exciting to have a video card that could do that. And I finally turn it on. I come around the desk to see if it's working, and sure enough, it's on. And I stretch a chart across all 3, and I see something. Way left. I'm like, oh my God, we're at a double top. And I shorted, boom, made enough money to pay for the screen. I'm like, yeah! In the first 1 second of turning it on, boom, nice. That's how you do it, right? And then, you start doing a little better, and you realize, well, if I'm doing better with 3 screens. What could I do with 6 screens? So then I bumped up and I got 6 screens. So on and so forth. So here I am. I have the capacity to do more than 18 screens. I think I have 6 downstairs. I have an array that I'm not using. I have 2 50-inch screens that I'm not using. So to me, 18 seems about right. I feel pretty comfortable. But also, I can't get a desk big enough. I'd also have to get a bigger room. And I already have dedicated air conditioning on top of the main air conditioning, so it's like a server room. So I don't know. I don't know if I would rebuild it this way. This is all old technology now, but that's it. So yeah, to answer all your questions. Okay. Yeah, Jimmy, I started trading Forex when I was 11. Losing large and blowing up accounts are all horrible learning experiences. So no, I'm not saying I'm a perfect trader by any means. And I've tried a lot of different things too that you would think would work on paper, and then they do work in reality for shorter amounts of time, and then they just don't work. In particular, when you're trying to work with other traders. And I've reviewed millions of trades by probably 1,000 different traders now. And I'm always blown away by when I find a good trader and they start trading, they do what they have been doing, right? Because that's why you look at their trade history and you're like, wow, that's really good. I like the way you trade. I understand some of the things. I might disagree with them, but I like them, and I like your history, and I like the risk, and I like all that. So I'm going to test you out. and here's some money, and they start trading great for about 3-4 months, and then they just like totally stop doing it, and they could completely start doing something else, completely different from what they've been doing in the past, and they just screw it all up, and it's only happened like dozens and dozens of times, and it just drives me nuts. So I think I want to be one of these guys that just walks into the market, drops $3 billion on a trade, and walks away. Like, that's it. I'm done for the year. F you, everybody. Right? F you, FX. And you just push everybody around. Boom. So, yes, I have tried many different things and found lots of frustrations in different sort of strategies for running managed accounts and running funds and all that kind of stuff. There certainly isn't a holy grail. And but here's the thought. The thought is when you do everything yourself, and I'm talking like as a fund manager or something now, when you do everything yourself, right, you maintain full control, but then you actually need to be tied to your desk 24 hours a day. And I really am. Like, you know, I was telling a funny story just, I think it was yesterday. I decided it's a good time to go take my morning shower, so I go upstairs and I turn the shower on and I turn Bloomberg on because I listen to Bloomberg television while I'm in the shower, right? And they're like, decision by, you know, the UK courts on Brexit. I'm like, what? So I run to my phone. I got my phone in the shower. I hadn't stepped in yet, so I'm not wet, but I'm naked, right? Right, and I'm in the shower, and I'm on my phone, and I'm like, oh my God, right? The market's moving, and I'm trading. I'm trading on my phone, like, oh my God, the pound, look at the pound. And I'm there for like 20 minutes on my phone, standing there. My wife comes in, and she's like, what are you doing? Hey, the shower's running. Right, the whole place is filled with steam. I'm standing there naked. I'm on my phone. And she's like, "What are you doing on your phone?" I'm like, "I'm trading the pound. I'm trading the pound." Holy smokes! Maintaining that level of alertness is very, very difficult. The upside is you have full control. The downside is there's no diversity. If you get sick, or if you make mistakes, or if you're wrong on your bias, and so on and so forth, there's no diversification in timing or strategy or whatnot, right? So one thing that I've been in search of for many years is simply a team of 25 people that can trade in ways that I understand, ideally people that I've taught, right? And that can just sit down and do it. And from that, right, from that diversification for clients, so imagine now you're running a fund and you got clients, well, they receive a diversification because you have, let's say, 25 different people doing 25 different types, you know, or trading independently 25 different ways, providing multiple levels of diversification from types of trading strategies to duration of trades to fundamental or technical biases to different currency pairs, and just there's so many different levels. Oops, I guess I should get rid of this. I forgot the webcam's on like this. So you end up gaining diversification for your clients on multiple levels from that. And the funny thing is, I've achieved it many times for a small amount of time. And then humans are the greatest weakness. But I don't like computers making the decision either, because they don't think. And they don't get normal things like, what is the market thinking in regards to the U.S. election? What is the market thinking in regards to the Fed? How, you know, what does the market think about non-farm payrolls? It's just, you know, it's just not enough. It's just not enough. I think hedge funds use algorithms to filter through lots of data. So, for example, you know, you can go to a hedge fund and see that they have a server room, and it's running 2,000 different strategies. And you don't go and trade all 2,000 strategies per se. you go in there and say, what's working best now, computer? And it spits it out. And pumps it out. And you're like, okay, well, we should go look at this type of strategy right now because that's what's working based on all the 2,000 strategies that we're running on, right? That kind of stuff. David Ross says, I've learned a ton from you over the many years. Cool. Hey, my pleasure, man. Are you using stop entries to enter NFP? You could. That is one way to enter a high volatility trade, and such. I generally don't. I generally like pulling the trigger. I like clicking the button, but that's me. But then you have to be there in the moment. But like I was saying before, I'm in my seat a lot. Right, I'm in my seat a lot. So I'm usually here. Like if something happens in the middle of the day, I'm usually on it within like minutes, like fast, right? Even if I'm not at my screen, I learn of it very quickly. I'm always watching the market, and if I'm running around the house or if I'm running around town, I got my phone. I'm watching the market. I'm watching it, right? So I'm a general pull the trigger guy versus stop entry. But if you're swing trading and you're not going to be around, like it may happen at London or something, and you're doing something like that, and you say, well, I'm going to trade this as a roll reversal. I like the fundies. I think this is going to come down, so on and so forth. So my general plan is look at this area here and then maybe look at that area there, and it's right next to a psych level and blah, 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 blah. So if it comes up there, I would like to be there to short at the 618 pivot point roll reversal, okay? But I may not be there now. It may happen later. It may happen while I'm sleeping. It may happen when I'm just not on my computer. Therefore, I'll put a stop there. And then when I do that, if I enter in through a working order, I run EAs that automatically put a stop and a target. Okay? So that if it goes up and then knocks me out, I have a predefined loss, even though I'm not there. Okay? Right? Even though, so that's all predefined, and I'll say, well, that's worth the risk, and I got all that predefined. Don't worry about that, okay? And then I get put in, and then sometimes what it does is it spikes hard, fast in your favor, but then you usually get a faster counter trend against it on the quick profit taking. So I always tend to have a limit. I always tend, right? 60% of the time it works every time. Oh, stock market just opened, by the way. So anyways, if I trade that way, then I always use stops and limits. And I do it through an OCO. Okay. So looking at today's move, technically, this is the stock market now. We were talking about pivots before, and I was telling you how pivots don't help in this scenario. Based on this, there is a lower low. Okay. The way I trade lower lows in a downtrend, remember it's been down for 9 days in a row, is sell retracements back to the roll reversal. That's what I call this, roll reversal. Okay? We are also at an important level. This is the 382, this is the 50%, and this is the 618. Okay? Now you also notice there are smaller term pivots and stuff in there, but you can see this. Right? There's a daily central pivot point where we are now, so on and so forth. I'm looking at yesterday's low, yesterday's high, and I'm fibbing that. Okay? So traditionally what you do on this, using nothing but technical analysis, is you sell that. Now I would like it to go up. Okay. But like I was saying before, we don't have that yet. On the higher time frame, it predicts down and then up. right? Did everybody get that from me? That I wanted to go up, but the technical analysis told me down first and then up. Okay. What resolution? They're just HD. What is it? 1068 by 1050 or whatever. $10.80. 24s? Wow, you guys are totally into this. Yeah, I think so. Or 22s? 22s. 22 and a half. Wide. 22.5 W. 1080. But I've had them for so long that it's outdated technology. They're LCDs and stuff like that. So. Love is blind news. I wanna see you. La da da da. Too numb to feel. Squeeze the handle. Blow out the candle. All right, Kiwi Yen pulled back to the 4-hour 21. It's very overbought. Okay. Aussie Yen, I guess we should go through some of these on the market open here. Let's start with Kiwi. Okay, so you can see what I'm thinking here. Really complicated stuff, right? The interesting thing is we had this as a buy zone weeks before we got there. 1, 2, right? Double bottom, then the higher high, which is a 1, 2, 3. Another higher high, right? Pull back to the role reversal. Another higher high, collapse, which predicts the consolidation. Right? Still lots of consolidation. We're heading up here. And it's slowing down a lot. So this is the 4-hour, and I suggested just a couple of seconds ago that we're at this 21. It's supposed to head up, and it can. I'm not supposed to be worried about the pullback, but I am worried about the pullback. And we got that in our face. So the thing is, if you believe next week's election on Super Tuesday is risk, then I think a lot of people will want out of the market before the risk. And that's why you see the stock market coming down. That's why you see pivots being noticed, but not necessarily respected, because they're not trading technically, they're trading emotionally. Right? It's not a logical decision. But I do believe, or if I were me, I would be looking at these as the drops as buying opportunities, right? So I know there's a little bit of a lag. So here, let's do another test. What did I say was likely to happen to the stock market at today's open? What kind of price action did we talk about? What would it do? Please type your answer. I'm going to wait. I know I'm fundamentally bullish, but technically, what did I say would likely to happen? I'll wait. At least I'll get to know how long the delay is. Drop is not specific enough. I want to see where you guys are, because I explained probably the next 4 days. Well, I guess I can't account for the election, but at least the next 2 days of what should happen if the world was just pure technical analysis. Okay, drop, double bottom, And then what's the next step? Double bottom off 55. Okay. And then, so down and then back up. Yep, Ryan. Yep. Yep, I'm bullish too, Freddie, but you still have to play the technicals. Double bottom, followed by a higher high, followed by a higher low, followed by a higher high. All right, so it looks like multiple people are saying the same thing, so you're concurring. Okay. So even though I'm a bull, we wanted it to come down first, right? And then, and like Ryan says, off the 50, because it's the 55 predicts the double bottom, and then the fundamentals would predict the higher high. Okay, so we were here. Let's go back to, was it the 4-hour 55? Hour? What 55 was it? 15-minute 55, right? Yeah, there it was. All right, so because of the 15-minute 55, okay, so we can mark that with this little mark here. Let's pretend that is the 15-minute 55. Drop in the 1 minute. Because of that 15-minute 55, it predicted that we would drop and make a double bottom. So we came in within probably 1 pip of yesterday's low, which you see I already have marked. So we were here post non-farm payrolls. And the 15-minute 55 told me that it would double bottom first, but my fundamentals told me it would head up. We would get into this zone. Oops, come on, drawing tool, keep up. It would get into this zone. Then we would come back here and kick off this area, right? And then follow that by an up. Did everybody get that? Is that what we talked about before it dropped? How many people will concur that I was that specific? I need to know if you're following along. Okay. Now the funny thing is, it's not my prediction, it's only what the charts tell me. I want it to go up, there's no doubt about that. But I don't know if it's going to go up. I don't know if anyone's going to buy it. But because this is the 15-minute 55, as I explained to you before the NFP event, right? When I went through my chart setup, I explained that if the 55 is in control, I'm expecting, and that was the word I used, I'm a bear, but I'm expecting a double bottom. So let's do it on a 5-minute chart maybe. It's a little clearer, all right? So I'm fundamentally bullish, but it's still technically bearish. How do you play it? You play it like that. Can I get a high five? Can I get a hallelujah? Hallelujah. Dude, is that guy at MIT? No. Well, that looks like the Green Building. Oh, by the way, I had to take a test, so I flew out to Harvard over the weekend. Let me tell you, is that an amazing experience? Studying in the libraries. They're just like, man, what an amazing experience. I'm just telling you, it just tingles, right? Like almost like a religious experience. where you walk into a church and you feel close to God or something. It's one of those things you're like, this is truly an amazing experience. So, for example, my daughter was reading, and I'm trying to convince my 10-year-old daughter to go to Harvard. And she's reading about the first Thanksgiving in America where the Pilgrims sat down with the Indians in 1621. I said, wow, that's a long time ago. When was Harvard founded? 1636. It's like Boston was still made out of it was probably like a fort. And they're like, hey, man, let's build a university. like, wow. Now, to a European, you're like, pfft. Right, 1636? That's nothing. But anyways. All right, so that's this. So, So the other point I want to make here is that I don't think right now we live in a technical world. I think the U.S. election is a big enough risk event that people are not trading purely technically. I think a lot of people just don't want to trade. Probably a good day or a good week to take the whole week off, right? Good time to just go to the Caribbean or something. And come back and say, hey, how did that election thing go? Or read about it on the news, on your iPad on the beach. You're like, oh, Trump won. How amazing. Right? And then come back when it all calms down and say, well, at least I didn't have money in the market, right? So I think there's a lot of risk. I think a lot of people are getting out of the stock market simply because it's risk. I'm still a believer in the market. I'm a believer in the economy. I'm a believer in the in the stats that we're getting. But this is probably a bad time to throw $1 billion into the market. Now, I think there are some very aggressive hedge funds that could do that. And buying a 9-day dip, I think is well within tolerance. But conservative and most fund managers, managing grandma's pearls, they're not allowed to be aggressive, and they could even now they have a fiduciary duty. So if they do something crazy, you could sue them. So now they would probably think it's prudent to not add new money into the market, and this may also be an opportunity to get out of the market, put some profit in the account, and not be hurt. It's just less exposure, deleveraging, all this kind of stuff, and it's a survival strategy, right? Because of something crazy could happen on Tuesday and Wednesday of next week. So they're like, well, maybe we shouldn't be exposed to that. You see what I mean? And and as Freddie Boy points out, 9 days down, time to be a bull. Well, if you look at the statistics, it's probably true, right? You could probably, Basebook would probably say something like, oh, well, if you look at the last time we had 9 days down in a row, there's an 82% chance or whatever it is of a bullish market. And, well, yes, except maybe split markets and all that kind of stuff, right? Concern could be that Clinton wins and control of the houses. Actually, that's less risky because we've been the Democrats have been in the White House for 8 years. Many of the players Clinton knows because she's also been part of the White House. And she knows players from the Bill Clinton years. So you could almost guess who's going to be in the cabinet. And with reasonable accuracy. And you know who she is. You know her policies. She has nice hair and she sucks at foreign policy. Okay, great. And that's what you're going to get, but you know it. And there's a lot less questions to answer. So it would probably be perceived as less risk. And then Trump is a little more of a question mark, like he doesn't even know anybody in Washington, D.C., right? So, like, who's in his cabinet? Right? Like, so it's a bigger question, like, overspending and all that. Yeah, whatever. Look, it's only money. Nobody cares. So, I don't know. And most people's concerns are overblown and all that kind of stuff. So I don't know. I think Clinton would be less risky, but that's not necessarily something I want, but nor is Trump. So, but I think there's a lot less risk because it's just the same. More of the same. Okay? Okay. But at the end of the day, I don't know how people are going to react. On the long term, I'm going to stay bullish. All right, 10 o'clock, we got some more kitty cat news. We got our Ivy PMI. Whoop, whoop. You guys want to get in on that? I think so. He knows the Clintons. Yeah, he's just doing it for them. It's amazing what you guys read. I don't read newspapers anymore. Not even for not even for financial data. I don't read it. I already know that. I already know it. So when they print non-farm payrolls tomorrow, I already know today. I was here. I watched it happen. I can go to the BLS and actually read the non-farm payrolls report. Why would I care what Wall Street Journal thinks? And then I have read, and specifically Wall Street Journal, I have read things where they actually misreported stuff. Like Ben Bernanke testimony and stuff. I actually was watching it live. I watched the whole damn thing. It was 3 hours long. I listened to every word, and then the next day I read it in the Wall Street Journal, and they got it absolutely, incredibly 100% backwards. It was 100%, 180 degrees. I'm like, oh my God, this is a complete misreporting. Just so, and I think that was probably the last day. I think that's it. Stop reading newspapers. Because then you get like Investor Business Daily, and they just want to sell you training courses and DVDs. And then you get like, Financial Times, and all they do is just reprint the same Reuters press releases that Wall Street Journal did. And you're like, oh my God. And then they say, oh, well, what about our commentary? Well, I don't care what other people think. And of course, if you're a Wall Street Journal commentary dude who wants to write an article about how to trade non-farm payrolls, why isn't he just a trader? Why doesn't he trade? Like, he's a newspaper guy. I don't care what his opinion is. He's probably not even allowed to be exposed to the stock market because of conflict of interest and stuff. So, like, why would I care about that dude? I got a brain of my own. I can just read the BLS statement, the whole report about non-farm payrolls. I can read the meeting minutes from the Fed. I can look at the Fed fund futures market. Right? I can collaborate with other traders every single day. I don't need a newspaper to tell me what to do or what to think. Now, the one I do read, and I haven't had time because I'm a student in college, but in the summer when I didn't have classes, I enjoyed it, is Barron's Magazine. But there's sections in Barron's Magazine where it's like an interview or profile of like a fund and the fund managers in a fund. Talks about how they got started and how did they raise their money and what is their strategy and what do they think about this thing, the election coming up or the Fed cycle. I'm like, oh, that's really interesting because I'm interested in how they run their fund. And how they got started. Where did these guys come from? What kind of people are they? I think that's interesting, but I don't care what their opinions are because I have to compete against them in the market. And I'm going to win. So, like, why would I care about my adversary? Right? So anyways, I know that's grossly exaggerated, but it makes the point. Okay, oil coming down. Yeah. Ish good, yeah. So this is actually a concern for a lot of central banks, and because this is what's affecting inflation. So central banks around the world have printed money to create inflation. The product of oil goes into everything from the food you eat to the clothes you wear to the cars you drive to everything else in between. Literally everything around you right now. You can look around. Everything around you has oil involved. Just shipping it, even if it's a ceramic cup, there's still oil and gas involved. Right? So, it's important to everything, and it's very inflationary. And in this case, as it falls, it's incredibly deflationary. Well, this sucks if you're a central bank and you just spent $3 trillion to create inflation, and you get this creating deflation that offsets all your $3 trillion. Wow. Hey, Atlanta Fed just raised their forecast. Now, the Atlanta Fed, they're crazy. I like them. They're crazy. This just came out. Real GDP growth, seasonally adjusted annual rate in the fourth quarter of 2016 is 3.1% on November 4th, up from 2.3% from November 1st. Whoa! The forecast for fourth quarter real consumer spending growth and real equipment investment growth increased from 2.1 to 2.6 and 2.7 to 5.9, respectively, after Wednesday's motor vehicle sales released by the Bureau of Economic Analysis. Huh! Look at that! 3.1 GDP? Das ist gut, ja. See? That is what I care about. I don't need to read that in the newspaper. I'm that in tuned. I was informed. If I'm informed 2 minutes late, I'm mad. So I got that 3 minutes late. But I'm doing a webinar. Okay? So again, the theory, right? The theory is you're the expert. You should get paid because of what you think. Okay? All right, so here we are. So that's interesting, right? So anyways, this brings inflation down. And that's bad, especially if we're talking about the Fed raising interest rates. This stops the Fed from raising interest rates. That is a Fed killer, not non-farm payrolls. That, my friend, is a Fed killer. Oh, here she comes. Watch out. Watch out, Fed, she'll chew you up. Oh, here she comes, she's a Fed killer. Yeah. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Now, correct me if I'm wrong. Well, let's do this differently. We covered oil before non-farm payrolls, right? Didn't we draw it exactly like this, back to the 21 and down? Did we, right? Yes or no? Did we do that before non-farm payrolls came out? So that must have been around 8 o'clock. So that's 2 hours ago. Did we draw this as a down 2 hours ago? Okay. Eds, hey, are we gonna follow up? We have a conversation or something coming up, right? I think we're supposed to. We got to get that done, or I got some amazing things going on right now. So I don't know. If you don't kick down my door, Eds, it's not going to happen. So the ball's in your court, I think. So I'm waiting. I'm also timing, since you guys aren't. I'm timing the delay in the chat. GM says it fell off news. Well, it always falls off news, dude. All right, what is the difference between treasuries, bills, and bonds? Well, bills and bonds are both treasuries. Treasuries are bonds issued by a government. Okay? So, those are government treasuries. You could buy bonds from corporations, right? They're corporate bonds. You could buy bonds from cities. They're called municipality bonds. But you can buy government bonds. Okay, so that's just, right? Government bonds are treasuries. There are three types of treasuries. Bills, which are bonds that are less than 1 year. Okay? Wow, I think there's like a 3-minute delay in the chat, by the way. I think it's like 3 minutes. All right, so anyways, anything less than a year is a bill. From 1 year to 10 years, a treasury is called a note, as in the 10-year T note. The T in note is treasury. The 10-year treasury note, okay? 5-year treasury note, okay? Anything more than 10 years, like 15 years, oh, is it only 15 seconds? Well, I asked everybody a question and then nobody answered, so that's interesting. Takes some time to answer, but people take time to answer, I guess. Well, I guess, the old days, there were 600 people in the chat, and I don't think we have that many, okay? So anyway, and then everything from 10-year above, 15-year, 20-year, 30-year, those are bonds. So are they bonds? Well, they're technically all treasuries. So when you say, I want to buy a bond, IVPMI 59.7, better than expected. Looking for CAD response. CAD not spiking. Okay. So they're all treasuries. If you say, I want to buy a bond, what you really are saying is you want to buy a 20-year or 30-year treasury. Now very often though, the word bond just means everything. Okay? So again, no real initial response on CAD. I'm looking at CAD yen and USD CAD. Not a lot has changed over there. So you buy the roll reversal or you don't buy the roll reversal. It's your call, bro. Oh, there's the DKK. Let me get off that. Okay. So you got to look at the range that we're in, right? You know what? Let me not use a drawing tool. Let me use, okay. So there's very clear support in here, right? So there you go. So the play here is this, right? But you should already know that. That's pretty basic. And the downside is over here, right? So it's all pretty straightforward. So if you're trading the breakout, you got the breakout on the news and you're looking for the pullback. Okay, so it broke out, it came back, right? So now it's whether it continues or not. And nobody really knows that. But your general plan could be as simple as, down into here and then up. Okay. Now, the IVPMI is better than expected. It's pretty decent. It's not like amazing, but you would expect some Canadian dollar strength, and you don't see it here. I'm also looking at CAD yen, and it's not there, so no response. So again, I think this is the giant sucking sound of Tuesday. The terminology, well, it's not the terminology is wrong per se. It's colloquialisms. It's just what people say. I'm a bond trader. And then you have to follow that up with, well, what kind of bonds? Okay. Munis? Are you a paper trader? That's short-term stuff, right? You trade the Fed funds futures markets. Trading a bond that matures in a week is different than trading a bond that matures in 10 years. And there are different buyers and different needs. Imagine you're an insurance company and you have 1 million clients. They all have $1 million homes, and they're paying you to insure them. And they pay you every month money. Okay? Every month they pay you money. $100 or whatever it is, $200, $500. And all this money is coming in month after month after month. And statistically speaking, some of these houses get damaged and you pay for them. But the risk over the long run is pretty significant if you think about it. Like anything could happen to these houses over the course of 30 years, right? So what you end up doing is stop being an insurance company. You end up being like a bond company. And, right? So you got all this cash flow coming in, but you're exposed to 30-year risks, and so you end up so there's different players in the market. If you're a corporation and you're General Electric, and you don't mind if I put my feet up, do you? And you're building a factory, okay? And you got a government contract to build jet engines for fighter planes. Great. Well, you need to, build the factory. You need to buy the equipment and install it. And then you need to hire a workforce and train them. Then you need to buy the raw material, the steel, the aluminum, the copper, the titanium, and you need to start making stuff. And, it's a $15 billion or $50 billion contract, but you don't get paid all at once. But you got all these expenses up front. But you're good for it because the government will pay you. You do have the money coming. So what do you do for these cash flows? You're short on cash, but you're long on potential, right? So GE now can issue a corporate bond, and you can lend General Electric money, and they will pay you an interest rate. That's what a bond is, a corporate bond. Cities do this as well to build things like freeways and bridges. And there's different types, and some are tax-free, and some are based on, I don't know, there's just all different structures, right? And they're all very often just called bonds, muni bonds, for example. So when someone says they're a bond trader, it doesn't tell you anything, really. Okay? So then you have to further up, like, oh, well, what kind of bonds? What do you do? What do you do? What do you do? Okay? But a treasury is a government-issued bond. You are lending the government money. And that's pretty low risk, right? Because what's the source of income for the government? Taxes. And if you don't pay your taxes, they can put lien on you, right? They can do a lot of things. So they're going to get their money, and worst case scenario, if they still don't have enough money, the government can just print some money. Now, they'll pay you back and the money won't be worth much, but they paid you back. They owe you money. They just pay you back. And you're like, well, but inflation's 25%. They're like, not our problem. Right? So bonds face risk. What are the risks? Credit risk. Right? Right? Default risk. And what's the third one? Inflation. You might lend them good money and they pay you back with bad money over the years. And then what if you lend a foreign country money? There are hedge funds, for example, lending money to the Ukraine. Well, the Ukraine has to pay them 25% because of the risk, right? Because what if they just say, nah, we're not going to pay you back? Well, you got to get compensated for that risk. So it's very interesting. Greece, remember, was paying 20% annually. So that was risk, right? That did that. So people wouldn't lend Greece money. So Greece said, well, we'll pay you 15%. And they're like, no, you're going to default. And then he said, well, we'll pay you 17%. And people are like, no, Greece, you're going to default. We'll pay you 20%. People said, no, Greece, you're going to default. So what happened? Draghi said he will do whatever it takes to protect the euro. What he did was he implied that if Greece defaulted, the ECB would protect the bondholders, that they would bail them out. So with doing nothing, no monetary policy, and without spending any money, Draghi simply said he would do whatever it takes. And now people said, oh my God, he just guaranteed any loans given to Greece so that the ECB doesn't have to give the loans? And then people scrambled to their computer screens, right, to the Bloomberg terminals and said, oh my God, really? Well, what are they paying on these things? 20%! And they're guaranteed by the ECB? Oh my God, boom! And money just poured into Europe. Europe was on the brink of collapse. And the euro skyrocketed in value. Money just poured into Greece, Italy, and Spain because now they're all guaranteed. Greece was paying 20, Spain was paying 15, Italy was paying 12, Portugal, Ireland, oh my God, and all this money just poured in because the ECB was going to guarantee everything. Not explicitly, but implicitly. That's enough. The euro skyrocketed in value, but those countries got the money. And what was the consequence to this? And what is Europe still facing? Ten, 9, 8, 7, 6, 5, 4, 3, 2, 1, no. Yeah, no, I think my chat is delayed big time. Still no response. It's been 20 seconds. All right, so I guess I'll just keep talking. The response was a very, very, very strong euro, even though the economy was very, very weak. The euro was very, very strong. Thank you there. It was a more than 30-second delay. John's got it. Deflation. The euro was overvalued, and this created deflation in the Eurozone. Thank you. Ryan also got it. Thank you, Ryan. Yes. Amazing stuff, huh? There was a consequence to it. And then the ECB decided to go out and buy bonds. Well, why didn't they buy bonds when it paid 20%? Now they're out buying bonds that pay negative. Thank you, ECB. So somebody got filthy stinking rich on that, if you're a bondholder. Okay, we got pound, yen, Oscar, Mike, pound dollar Oscar Mike, euro dollar Oscar Mike. We're still on that. I guess we should move over and probably end today on the USD yen, because that's where we started. No, Eds, I wasn't going to the bank crisis thing. I was more of the exchange rate thing. The banks have always been messed up, and Europe did very little to fix that. The European bank problem is pretty much the same. I would say except for like Ireland. I think Ireland really got their act together, made some changes and stuff. But they had a pretty strong personality in charge of their finance industry. But you know, I don't know, or I don't know, like if France or Germany or Spain, I don't know if they're any better off. Italy, I don't know if they've fixed anything yet. And when you talk to a European and you talk to Nobel laureates in economics, they'll tell you the problem with the euro is the euro. It was a compromise, and compromises don't work. So here we are. We're still in this. This is the scalp, guys. Love is blindness. So no, do, do. All right. So I know it's not pretty. Oh, I know. Oh, I know. All right. So the scalp failed. Fine. But we haven't breached anything horridly. We're still in the support zone. It's just the scalp failed. I doubt you lost any money if you did what I outlined. All right, but the fundamentals are still there. We're shaking out anyone that's uneasy about the situation. You are at support. 102.84 is support by definition, right? That it is support. And we came down, we respected it again. And we are heading up, which you would fundamentally expect in this situation of a good non-farm payrolls. Have we made a higher high yet? No. So scalpers, there are scalpers here that would sell that. Okay. A breach, however, so let's do this like let's get funky with it. Let's do it this way. I bet you can't quite see that. I'll draw it. That's confusing. Let me draw it this way. All right. If we can get, let's do it like that. And then let me adjust that. No, and then let me adjust this. If we can get above there, bull. Okay? If we can't get above there, bear. Well, and now we're right on it on a 1 minute chart, right? Or you say that was a very muted non-farm payrolls. There are very few traders that are participating in the market, and with that comes additional risk. That if there are less market participants, then the technical analysis is less likely to be accurate. Do you understand this, guys? Technical analysis is simply a self-fulfilling prophecy. And if we all do the same thing, it should work out for everybody. If you buy at support and sell at resistance, you should make money, because other people are buying at support and selling at resistance. Most likely, if you're losing money, it's because you're not buying at support and selling at resistance. That'd be like the first thing I'd look at. You're somewhere in between. and you lose no matter what you do. But if you lose money when you buy and you lose money when you sell, it's because you're not buying and selling at support or resistance. You're just la land. And it happens. I broke down someone's trade the other day. He's like, "Hey, what do you think about this trade?" I'm like, "What?" I was pretty critical, but I'm like, I don't get that at all. Like, how the hell are you buying there? Like, that makes no sense. But it was honest feedback, right? But and that's usually what happens when I review someone's trading, or if I'm starting like a mentorship with somebody. I look at their trading and I'm like, wow, what you do makes no sense at all. Right? But bear in mind that technical analysis is a self-fulfilling prophecy. It has nothing to do with fundamental analysis and stuff, right? Okay. But it only works if other people are acting with you. You're not big enough to move the market. I'm not big enough to move the market. But 100,000 buyers all buying at or near the same price might be enough to move the market. And that's what you need. Where are the 100,000 traders going to buy, and where are the 100,000 traders going to sell? Well, if you don't have 100,000 players in the market, then maybe it's easier to move the market, which is not necessarily a good thing. But also, you don't know what those guys are going to do. There's more variety. There's less error, right? It's a smaller sample size, so the margin of error is higher. So you buy at support, and guess what? It might not bounce. There's just no one else trading. You're there all alone. So you might look at a day like this. If we don't pick up some volume and volatility, it may be considered by you undue risk. Right? Sounds smart? All right. CAD is weakening. It did not like the IVPMI. It was good, but not good enough. Aussie also coming down. So what's taking over is the fall in oil prices, right? So I'm looking around multiple currencies. I'm looking at Kiwi coming down. I'm looking at Aussie coming down. I'm looking at CAD coming down. What other commodity currencies could we look at? And this is where you type an answer, by the way. I just want to make sure. Boo, 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 boo. Ba 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 da 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 da. I'm assuming you're typing. Noki. Okay, great. What does Noki represent? No, well, not yen. I mean, I'm just talking about currencies. So I said CAD, I said Aussie, I said Kiwi. So Noki is good. Mexican peso, fine. What does Mexican peso represent? Yeah, Noki. Okay, well, the delay is enough where I'll just answer. So, Norwegian krone. Okay, that is oil, North Sea oil, Brent crude, if you will. Right, Australia, you could say sort of gold, oil would be represented by Canadian dollar. Now, the one we're looking at here is Denmark. Denmark and Norway represent dairy. Okay? Okay, yeah. And then, how about South African Rand? Rand follows gold. Click on the live and it goes live. What do you mean? So, Mexican peso, is it oil? Mexico exports a lot of oil, yes. As you probably also know, everybody in the world is talking about Mexican peso falls when the likelihood of Trump winning the presidency goes up. That's been so overplayed and it's ridiculous. But they also are a major trading partner with the United States through NAFTA, and that could also impact them. But generally speaking, yes, if oil goes up based on demand, let's say, not for other reasons. Let's say demand for oil goes up. Okay, great. Then that means that's good for global macroeconomics. That means the United States is doing very well economically. Means Americans have money and they're wanting to spend it. That's why global macroeconomics is good. That's why demand is high, because like factories in China and Japan and other places need energy, so they're importing oil, and that pushes up oil prices and all that kind of stuff. And therefore, if the United States is doing really well, and businesses in the United States are doing well, and consumers in the United States are doing well, and even the government in the United States is doing well, then they're going to do a lot more business with Mexico. And Mexico will benefit from the increased amount of business that they're doing with the United States. But also, with higher oil prices, they do have that as an export. Now, having a socialist pig dog government that closed the industry, what happened is the Mexican government for a generation or two relied on oil instead of having let's say, a tax base. They just relied on oil. And they spent all the money and they did not make any investments. This is why socialism fails, by the way. But it's been tried all over Latin America. And Latin America realizes that socialism sucks and that they need to move away from it and move to more of an exporting economy, which isn't perfect either, but it's better than sucking, right? So anyway, so Mexico made all this money, billions and trillions of dollars, didn't invest back into the government, and so now they have oil, but they have obsolete technology. It's very inefficient, which means it's costly. And at $45 a barrel, they're not really making any money because they're so inefficient at producing the oil. So like when Russia finally opened the doors to foreign organizations to go into even the best part of Russia, like and the Balkans area and Kazakhstan and stuff, when Shell, Royal Dutch Shell and Exxon finally were allowed to go in there on joint projects, they would show up and they were shocked and amazed at the technology that was being used. It was basically, buckets down a well. And they're like, oh my God, your technology is so behind. And then you would look at the Ukraine is actually a very heavily industrialized area, and you walk in their factories, and the factories have not had any investments since 1958. And so the Ukraine actually is one of the most energy-intensive countries in the world. It's like driving a a vehicle that gets 2 miles to the gallon. It just requires so much gasoline and oil that it's ridiculous that you're like, oh my God. It's just hard to believe. Well, but socialism didn't work. There's no incentive to improve. Why would you improve your technology? Why would you want efficiency? Why would you want that? Why would you even think that way? Like, why would you want better? You don't get paid for better. Right? So anyways, there's my little spiel on that. So Mexico, literally, Pemex was the only game in town. No foreigners were allowed to go in. It was a government-controlled company that pumped out oil, and they didn't reinvest. They didn't put in new technologies or improvements or whatever. Just they ran their industry into the ground. A lot like Venezuela, for example. Venezuela has more oil than Saudi Arabia. And right? And they do not sell Coca-Cola in Venezuela anymore because it costs too much. You would have to spend like $10,000 on a can of Coke. You're like, $10,000 for a can of Coke? You're like, it's just ridiculous. How could you have trillions and trillions and trillions and trillions and trillions of US dollars worth of commodity assets and you can't afford to buy a can of Coke because you're too poor? Oh my God. Right? But there's always Cuba to look at. So hey, capitalism is not perfect by any stretch of the imagination, but at least it works, and it incentivizes you to dream. It incentivizes you to get out of bed when you don't want to. It incentivizes you to think differently. You want variation in capitalism because that's called competition. It works in nature. Okay? It works in nature. So being unique and different may be challenging, but if you do it right and it's wanted, the variation improves society, then it is rewarded. And so being a little bit better is a good thing, but being a whole lot better, like by changing the technology and changing the game, like making roofs out of glass now, like Tesla's going to do. Amazing game changers, right? But that's entrepreneurialism in a capitalist society where that's rewarded. Right? And then there are French children that grow up dreaming of a government job. They're not dreaming of entrepreneurialism and changing the world. Well, that's a problem. One day, I will work in the passport office. Wee. Best job in town, right? Oh my God. So capitalism works because I think it's closest to nature. I actually wrote about this, by the way. I think nature is capitalistic. Winner takes all, and then competition challenges, and then balance and equilibrium is found. Mexico is a great example where they didn't have that, and now, yes, they are a major exporter, but they're still a third world country. And they're not very good at producing oil, but they have it, and sure. So I wouldn't necessarily track Mexican peso with oil, although oil is very important to Mexico. I think even more than that is how much business they're doing with the United States. And if Trump puts up a wall, which he's not, then that may be bad for Mexico. I think Trump is speaking to very simple people when he's talking about what he wants to do. But I think going into like renegotiating NAFTA, he's not getting rid of NAFTA. But you have to realize the United States had a policy over the last 30 years to open up borders, open up trade. It's a form of competing with socialism and communism, to open up borders and develop relationships through trade. It creates stability. right? If we work together and trade together, make money together. Right? Yeah, I'm looking, I'm watching. So that's a good thing. But to encourage that, maybe you give yourself a not so good deal. Maybe you give the trading partner a better deal. You give China a better deal so that foreign direct investment goes there. You give Mexico a little bit better deal so that we can open up areas to invest, to build factories that are close to the American border so we can do things like, you know, putting parts together and then shipping a car back to the United States. And you want it close to the border. You want us to be able to build the factories, and we need to train and educate people, and we want this to happen. And so we have to get the relationship going by enticing them with a pretty good deal. But 30 years later, you're like, okay, well, let's revise the deal. I know he doesn't explain it that way, but I think maybe he's right. Maybe it's time to revise the thing because they don't need so much incentive. It's like we don't need quantitative easing anymore. Right? We don't need emergency measures. Japanese yen is weakening. The webinar is now kaput, but pound yen starting to move, euro yen starting to move. Stock market, by the way, we got to end there. Okay, the 15-minute 55, right? Let's end there. 15-minute 55. Well, no. We got to go even farther back. The fundamentals suggest the stock market should go up based on non-farm payrolls. The technicals on the 15-minute chart said, okay, if the stock market is going to go up, first it needs to fall. Right? We didn't do it on any of these charts. Well, let's just use this one. Okay? So fundamentally we said it should go up. Technically it said it will go up, but first it will fall from the 55 EMA down to the double bottom, and then it would go up and make a high up into this area around 2097. Right? So down to like 2085, up to 2097, and I believe down to 2091 and then up, right? And it is now fulfilled the fall part. It has now fulfilled the rise part and has technically made a higher high. And may continue. So that's how you combine fundamental and technical analysis, and without freaking out, like, oh my God, look at USD yen's falling, everybody freak out, buy so much yen, right? No. So it seems like it's behaving. No need to freak out. Lots of daylight left. A lot of risk coming up next week. I want you to really behave carefully, be conservative, don't freak out, don't chase price. Now is the time to be the trader you'd like to be. If you want to be a patient, disciplined, risk-averse trader, this is the week to show it. If you want to hang out with me all of next week, Monday and Tuesday and Wednesday and Thursday, open up an account at tradersway.com now. Even a demo account, it's fine. Do it now. You can spend the whole week with me next week, except Friday because I only work with premium members at FX Street on the upcoming Friday. Okay? But if you want to work with me free Monday through Thursday, open up an account at tradersway.com right now. Okay? We can do the election together. We can trade the aftermath of the election together. But you are not alone. Right? I'll trade with you. So I want you to win. I want you to succeed. I'm here for you. Thank you, FX Street. Thank you to all the moderators, a huge team of moderators stationed all around the world. I hope you enjoyed the webinar. I hope it was fun. I hope you learned something. You probably didn't make any money, but it's better than dying, I suppose. And maybe I'll see you on Monday if you open up that account at tradersway.com. Let me know if you plan on doing that or if you've already done it. Type it in the room. Take care, everybody. Have a wonderful weekend. Cheers. Daniel Lopez? Really? I know a Daniel Lopez. I wonder if it's the same Daniel Lopez. Why so many monitors? I can see things really quickly, and chicks dig them. Right? That's why so many monitors. Oh, you hear the bird in the background? Yeah, I got the window open. Nothing like some fresh air. Thank you, guys. And yep, yens are on the move. Oscar Mike. Bye-bye.